Right then, folks. Seems like we're all ready to go. Good morning. Thank you as always for attending. It's always a pleasure. Thank you to FX Street for hosting these sessions, of course. And today what we're going to cover is we're going to go through some, again, we've covered it before in the past, but it's pretty much the foundation stone of my own trading, which is to identify a location of interest where I think that the next movement will start. Just picking up on a question just prior to the session starting was AAA was asking for the euro dollar trend. It's relative, relative to the time frame, relative to the time frame and data that you're looking at. And the trend can be up and down at the same time. It literally is relative to the time horizon, the time frames that you're looking at. So with that in mind, do we really need to worry about which way the trend is going to a certain degree if we can find a location on the charts where we think something very interesting could happen? A movement, doesn't matter whether a trend is up or down. The aim of the game in trading is to make money, and if we can find a location where we think we're going to make money, then that is seriously going to improve our chances of success. So it's a simple concept. Some of you may be familiar with it already, and it literally revolves around finding support and resistance. I call these levels of interest because support and resistance is all over the charts, from minor support and resistance levels, swing highs, swing lows, to what some people could consider major levels of resistance or support. So trying to find out and trying to filter through which levels, which support and resistance levels are perhaps more important or potentially more significant than another location on the chart. And it starts off with the premise of find the last movement. Okay, so on the charts here, we've got some nice movements. Find the last big move that started, and what I'm looking for is a thrusting movement. So we've got a good illustration here. We've got a nice, big, strong movement where there's been a significant shift in the balance of power. As we can see, just prior to this, we had price moving upwards, but then the balance of power dramatically changed and moved quite sharply back down. So what I'm going to do with this is going to continue this on. So we've got a little bit of continuation down here, and we can see that the balance of power continued, well, it stalled and then continued to move down quite strongly. Similarly, we can see that price has moved in the opposite direction, almost as strong. So we can mark this off as a good, strong movement. Now compare those moves that I've marked off with this next area. So compare the previous boxed areas with the circled areas. Can we see the difference between the type of price activity? We've got strong, almost single directional movements, multiple up bars, multiple down bars next to each other, and then compare this circled area with the previous three boxed areas. Can we see the difference? There is a very significant visual difference between the type of price activity. Yes, price is moving in the circled area, price is moving up and down in a similar way, but we're not seeing that same strong thrusting price movement. The next one we have, again, just for illustration, we can see we've got nice strong movement there. So literally is identify where there has been significant shifts in the balance of power. Is everyone happy at this point? Does everyone understand this first stage? Identify where there's been a significant change in the balance of power. Does everyone understand this first part of the process? Excellent, Pat. I know you've seen this before. So the next part is, well, if this is where the balance of power changed, then it's a fair assumption, price has already proven it, that's where, or that part of the chart that I've squared off, that's where there is a significant money flow in a single direction. So I'm going to take the high-low range of the bar at the start of this move, and I'm just going to take that across the chart. I'm going to take the high-low range at the end of the move. Now, I can only mark off the end of this move, just where the cursor is here. I can only mark off the end of that movement after the following move has started. So appreciate we're doing this with a little bit of hindsight, but nevertheless, I'm going to take that location across the chart as my end move. So I'm going to take the start point and the end points of these movements. This one here where the cursor is, I can't really mark that one off until I've got price moving away from that level. So as price starts to rally back up, we can mark this one off here. And as price sells off, we can mark that one off there. So that's how we do it in real time. So we just tied the chart up a little bit. What we end up with is quite an interesting view of the charts. So take the high-low range of the bar at the start of the move, the end of the move. Now, obviously, in real time, we don't know the end of the move until price has started that next move away from this location. So let me just wind back the hands of time. When would we mark off that end point? Okay, so if we're doing this in real time, price is moving down, we can't realistically mark off that end point of that movement. So it's only around about this point where we can say, well, yeah, now we've got that significant move up, that we can definitively say that this is the end of that movement. And that, round about this point in the chart, that's when we could mark off this end of the move of the downward movement. So when do we mark off that upper, the end of the upward movement? I'd probably mark that off around about this location. We've obviously got price moving away from that location, from the end of this move. So I'd most likely mark it off at around about that point when price is pushing away from the end of that movement. So again, just going through this in or effectively what would be perceived as real time. So when do we mark off this location here where the cursor is now the start of that movement up? Well, we can't mark off the start of that movement up, and we can see it coming back into this location. So that's the point where I'd mark off this lower level, just where the cursor is. And again, as price moves down, when do you mark off this upper location? Well, as price moves away, and pretty much back down to this lower level of interest, and that's when this location would be marked off. Is everyone happy with that? Again, just to try and give you a little bit of a feel for how it might go in real time. You're not going to be able to mark off the end of the move immediately is ultimately the point we try and make. Does everyone understand that point as well? So trying to do that in real time. If you want to put a figure on it, yeah, I mean, you most likely could put, but then again, you might not see a retracement. I mean, this location here, price paused at that location and then continued. So what we could do in that case is, as price makes the next movement down, we could obviously say, well, yeah, that's the start of that move there. That move down. So it's not always going to be a retracement. It could be a continuation. But essentially what you want to see is, again, just compare this circled area that I'm drawing on now, that circled area where the cursor is, compare that with what effectively might be considered around that trending price action. It doesn't matter whether it's with the trend or what might be counter trend. We're looking for thrusting price movements. We're looking for where there's been significant movements, significant shifts in the balance of power. And compare that with this circled area where the cursor is. Yes, we've still got movement. We've still got those, multiple down bars, multiple up bars next to each other. But it's not, it's up, down, it's kind of grinding sideways. And again, I'm trying to be loose with this and not put a specific label on any sharp pattern. but certainly there's a big difference between this circled area. Certainly there's a big difference between this circled area and, you know, the price activity around it. Yeah, I mean, to be fair, I mean, Dr. Rob, I mean, if you want to, you know, try and classify these things, that's fine. I personally don't worry about what they're called. I don't worry about whether it's with the trend, counter trend, sideways. I'm literally trying to identify locations of interest. So once that's been done, we've got the chart looking something like it is right now. What I'm then looking for is for price to come back to a location of interest. So for example, at this point of the chart here, this is when I say, well, yeah, well, price has just come into this. Now, the way I do this in my own trading with my own strategy is I look at the last completed bar. So if the last completed bar is touching my location of interest, then I start to get quite aggressive with my strategy deployment. I'm looking for the next movement, the next big something to start at that location. So when you've identified these levels of interest, these would be, again, you could term these as support and resistance, but these are levels where I would have more weighting, I would pay more attention to these locations because historically there's been significant buying or selling pressure that has led into a significant movement. So that when price comes back to these locations, it's a fair assumption that if price gets back there, based on what happened previously, when price gets there, and based on what happened previously, it's a fair assumption that because there was significant money flow into the market, into the currency pair that you're looking at that location previously, it's a fair assumption, and that's all it is, an assumption, that there will be future significant money flow at that location once again. This is where the institutions are interested in placing their orders, executing their objectives. And all we're trying to do as retail traders is literally jump on the shirt tails of the money flow. When the bar's at night, how do I do that? Well, if the bar's at night, I'm in bed, I'm asleep. There's nothing you can do about it. And typically, the main movements typically happen during the UK trading session. Today's one of those exceptions to the rules if you look at your own charts right now, where most of the movements happened during the Asian session. It happened while I was fast asleep, so I've done no new trades today whatsoever. So when or if price gets back to this location of interest, I'm working on the assumption that the next something will happen, the next big movement. Now, as we can see here, it's not always going to be the case where that movement happens immediately. It might be we see price push away, consolidate slightly, attempt to go back into it, and then the next movement starts. So it's not always going to be an immediate reaction away from these levels of interest. It might be that, you know, the money flow that was at that level has dried up. And again, as traders, we don't know that until after the fact. So what we can see is price literally reacting back and forth between significant levels of interest. Now, on that note, here's how I would deal with this. So price is coming down through to this lower location of interest. Now, what I'm basically saying is when price gets back to these locations, whatever your strategy is, deploy it. Okay, so I'm not going through a strategy specific, but this will add an extra dimension to however you trade. If you're a trend line trader, you know, that's when you're looking for a trend line reaction or a trend line break when price is at these locations. If you're a fib trader, you know, you're looking for a nice fib retracement perhaps at this location of interest. It would put more weight into your own strategy analysis. If you're a breakout trader, you're looking for a consolidation breakout at these locations. If you're an indicator person, MACD, you're looking for a MACD divergence, a crossover, a continuation. You know, you're looking for some indication that will give you a signal at that location. That's what I'm saying. So when price gets back to these locations, deploy your strategy. Okay, so trying to work through this effectively if it was in real time. We've obviously got a significant downward movement. Now what will happen at this point is I would then refine this upper location of interest with where the most recent price activity highlighted the start of that next move down. So I would now update that. I would basically refine that. So this one is pretty much redundant, and this one is most recent location that I've just drawn on. It's effectively the same location, but what I've done in this case is just refined that location based on the most recent price activity. So as price moves down towards this lower level of interest, again, remember, we can't mark off the ends of the movement until the next move away from that location starts. Yeah, effectively, these are action zones. I mean, technically, they are support and resistance if you want to put the label on it. Yeah, I mean, I refer to them as levels of interest. Support and resistance implies a direction, if that makes sense. So you're going to buy support, sell resistance. That's the common understanding of support and resistance. So when price is down at support, if you call this support, already in your mind, you've got a bias. So when price is down at support, you're thinking, right, price is at support, I'm going to be a buyer. Well, I personally think that, you're reducing your options. What if price continues through support? It's still a good location, but what if the decisions by the big dogs, the institutions, the money flow, is not with the buy side anymore? Quite clearly, as price comes down to that level, it's on the sell side. So what if they decide to pile in more money at that location and continue with that downward movement that we've seen previously? So by calling it support and resistance, you start to form a basis for a bias, a judgment, an opinion. So technically, it is support, it is resistance, but if you refer to it in a slightly different way and change your perspective, change your view of the same information, it's a location where I will be looking to take action. If my strategy at that point says be a buyer, I will be a buyer. If my strategy at that point says be a seller, I will be a seller. For me, that's as simple as that's as simple as I can make it. So as price runs down through this lower level of interest, how do we deal with this? How do we update the chart? Well, the location is still good at this point. I don't have an endpoint. I've got a brief pause. Don't get a lot of head fakes. Question from the room, but don't get a lot of head fakes. To be fair, you're going to have that with any strategy, Dr. Rob. You really are. Any strategy you have, you're going to have false signals. You're going to have false starts. It might not start moving as you desire immediately. Every strategy you potentially could use, you will have that issue. But what's going to put the odds in your favor is finding these locations, because that previously, historically, there has been a significant movement away from these locations. And you're working on the assumption that there will be a future significant movement away from these locations. So while it might take a few false starts, and certainly with my own strategy, it normally takes a few attempts to get going, the end result significantly outweighs those initial few attempts to jump on board the start of what could be a significant movement. So back to how we're trying to deal with this portion chart. So how do we deal with trying to update the chart here? So I'm trying to go through as if it's in real time, because obviously in real time we just simply don't have enough time to go through and follow the chart in real time. So I'm trying to give you the next best thing of how I dealt with the euro at this point. So as price went through the low here, we've got the location. Now I'm not going to update the location of interest, this lower location of interest yet. Price hasn't moved away. So I'm going to consider at this point that price is still in that lower level of interest here, this 130 100 on the chart. So price is still at that location of interest. So I'm still looking to deploy the strategy at that point. And as price moves, excuse me, as price moves again up and away, in this case, that's the point where I can update the chart, the start of the end of that previous move, and in this case, it's also the start of the next move up. Aiming for price to get up to 13400. We know what happens. So price is at this location here. So what's going to happen in this case? So again, this location remains valid. So as price gets into or moves into this location, and well, it looks like it's stopping at this location, I can't yet update and refine that location of interest. It's only when price starts to put in a movement away from that location that I can then say, well, yeah, we've got this, we can refine this now. I can say that, well, yeah, 13400 previously was the starting and stopping point, but this is where, this next movement started. And then I can refine the chart. And now this previous location here becomes slightly redundant, and this is my new lower level of interest. So does anyone understand the mechanics of trying to update the chart in what effectively would be real time? Appreciate we've not got the time to go through it. It would take quite a while to go through it. Yeah, I'll use it again. I'll use it several times. But what I'm looking at is, as I've just been through, Rob, is basically the locations of interest. These locations of interest. What we're doing, what I've just tried to go through as an illustration, is at what point do we say it's redundant, and at what point do we refine where the level of interest is. Basically, Pitfinder, when price gets to these locations, whatever your strategy is, deploy it. So, as I said earlier, if you've got a move and average strategy, deploy your move and average strategy. If you've got a reversal strategy, use your reversal strategy. If you've got a MACD strategy, use your MACD strategy. If you're looking for breakouts, look for a breakout at that location. Look for a consolidation breakout. If you're, again, a pattern trader, look for the pattern, whatever strategy you have. Think of this as a bolt-on. The bit you do, the analysis you do before you place a trade. So if you do this at the very first thing I do is the location favorable? So if the location's not favorable, not looking to deploy the strategy. That's effectively what I'm looking at. So when price does get into these locations of interest, deploy the strategy. If it says be a buyer, I'm a buyer. If it says be a seller, I'm a seller. Sorry, going back to Rob's question, the other Rob. So do I use these zones again? Well, yeah, I mean, price can come into these locations. Over here, price can come into these locations multiple times. So when price gets into these locations, this is when I'm more aggressive with my strategy. I'm looking to either long or shorts, and I'm looking to deploy the strategy and try and be on the next movement when it starts, as opposed to trying to participate in a movement after it starts. Now, one of the things I've noticed, certainly since after the financial meltdown, from my own observations in price activity, is a lot of the standard technical analysis patterns can, do often get you in quite late into a movement. I don't know if any of you have observed it yourself, is that price is moving very, very quickly. We're seeing intraday, we're seeing price, 2-3 hours at best, where price puts in a significant trending movement, a significant thrusting movement. And then there can be 5 or 6 hours either side of that movement where price literally is completely stagnant. So what I'm trying to achieve in my own trading is to be on the movements, the potential movements, before it's given any indication of that movement. So it is a little bit more aggressive the way I deploy my own strategy, but I'm trying to be on the move when it's going, when it starts moving, and not to participate after it started some movement. An example of that might be a consolidation breakout. By the time price is broken out, a lot of the time, that, unless you're looking at really low time frame entries, a lot of the time that moves over before you even had any type of standard indication. So yeah, I can use these locations several times. It might take me a few attempts to get on board. So as price moves away from the previous location, refine the new start of that next movement. As price comes down to this lower location of interest, I've used it previously. It's still fine to use. It's the location where I'm saying the next something will happen. Now in this case, we have here price followed through a little bit, comes back into that location, and then the next movement starts. And we can see it took, in this case, it took about 2.5, as I recall, it took about 2.5 days to actually start a more significant movement. So yeah, to answer your question, the same levels can be used again. So coming on to my usual setup. This is my usual setup. So Euro Yen, just to give you an idea, this is pretty much what I'm looking at the moment with Euro Yen. We've got some very interesting levels of interest, very interesting. We've got some significant distance between upper and lower levels of interest. So going back, again, just trying to do a little bit of updating on the charts in real time. You've got to go back quite a distance to find where the next location is. Where's live price now? Look left across the chart, and we're going to look up. So we're going to look left across the chart. There's the live price there, just in that dark shaded green area. That's where the current price is right now. And as we can see, it's in the middle of this, these two levels of interest. So price has been through the 120. I personally think this is going up to 125. I can also use this for targeting. So as price goes through one level, where's the next level? The next level is up at 12500. So that's personally where I think it will get to on Euro Yen, because again, just zoom in, this is where the last significant movement at that location on the chart, that's where it starts from. So this is what I'm looking at on Euro Yen right now. Over on the pounds, again, we can see that I've got a few other things on here as well, but again, this is essentially what I'm looking at the moment. We can see that price has reacted. It's just literally ping-ponging between support and resistance. Found some great moves up, great moves down. Price last week just, briefly stalled before eventually moving up. Where did it get to? It went straight up to that next level of interest. I was looking for 16400, as anyone who's in my my own live room can confirm. I've also got that on my website if you need to double check that yourselves. But nevertheless, price comes down to these locations. As the next move starts, we can refine this level. Now this end move in real time, it hasn't finished, but where's price finished? It's finished at previous location interest, where a significant shift in the balance of power started and stopped. So there's a good chance that this is all we're going to see for the week. So as price moves away from this location next week sometime, I'll be able to refine this location here and refine it with the latest information in price. Rob, again, you can do. Do I use candlestick patterns to trade the strategy? I don't need to. Is the answer to that? You can do if you want to. So, for example, you could cobble together a reversal strategy. You might say, well, when price gets to this location of interest, I'm going to look for a reversal bar, a shooting star, hammer, doji, dark cloud, cover, piercing line. There's lots of candlestick reversal bars. So if you want to utilize a reversal strategy with this logic, there would be nothing wrong with that at all. There's plenty of good examples here. Again, if we just go back to where the cursor is, we can see price moving away. Here's the location of interest. What happens here? We can see we've got this hammer bar formation, which led into this, this move up. But yeah, ultimately you can do that. Over here, if you look at the example, price back into this location here, price moves up, down, and just where the cursor is here, big bullish engulfing bar. That nice little, indication. If you want to use it as a reversal strategy, there's certainly nothing wrong with that. Are the dots fractals or PSR? What dots, to be fair? These are just horizontal lines. To be fair, folks, that's it. That's it. I mean, it's a simple concept. So, I'll take an open forum. We've got 15 minutes. I'm actually ahead of time for a change. Usually end up going over time. So I'll take open questions. Make sure that you understand this concept. I've been through it many times in the past. No doubt I'll go through it many times again in the future. If you need to recap it, this session is being recorded. There's a little bit more detail if you follow the link. There's an article there, and there's also videos there if you wish. But that's really the concept. This is literally the first stage of what I'm ultimately looking for. Is the location favorable? If it is, this is the time I'm going to get down and dirty and start being more aggressive in my own trading and look to be on the next significant movement that might ultimately occur. So, any questions, folks? Let's make sure that you all fully understand these questions, comments about this concept, or if you want to go through any other questions, again, please feel free to. Yeah, you can use this on the lower time frame drop. I mean, in the past, I'm not sure if you've been in past sessions, but we've certainly looked at this in the past, where this is a 60-minute euro chart. You can certainly look at this in the past. Let's just, let's go through that. How would you, this is something we've done in the past as well. This is what I generally use for these sessions. So let's go through this right now. I actually did this yesterday with my own team. But nevertheless, identify the thrust moves. Where does the next big move start? Where does the next big move start? Where did price react yesterday? So yeah, it can be done on any time frame. This is your basic support and resistance, and it'd be relative to the time frame that you're looking at. So if you want to do this on a 5-minute chart, you can do it on a 5-minute chart, 60, 30, 15-minute chart, 8-hour chart, daily chart. It's pure price action. All you're looking for is the money flow relative to the time frame that you're viewing. Perhaps once a week, typically enough to update the locations from my higher time frame is the 8-hour charts. So they're not going to significantly change that often. But obviously, if you're doing a 60-minute chart, they can change, once or twice a day, or be updated or refined. But they're not going to change too often. Again, Rob, so the question was, so mark off the zone or a box. I don't care what kind of candle forms as long as it takes the range. Yeah, absolutely, yes. So basically what I'm looking at, just to summarize your question, I'm not looking for a specific candlestick pattern to be in that level of interest. It's just literally, is the last completed bar that developed, is that in that location of interest? So on the pound right now, the last completed bar here, where the cursor is, that is in the location of interest. So I'd be using this last completed bar to deploy my strategy. Right now we can see the current live bar. This completes for me at 2 o'clock this afternoon in a few hours time. This is also in that location of interest. So I could also use this bar as the trigger to deploy my strategy. So it's not a specific candlestick pattern is the point. I don't see the need to use it myself, but you can do if you want. If you want to develop a reversal bar strategy out of this price location assessment, you could easily do that. Question from Mike then. In my live trading room, do I also live trade myself? Yeah, I typically talk through what I'm doing, when I'm doing it, why I'm doing it, so that team members can see how the strategy I use is deployed in real time. I'm not one of these people that says, hey, here's what happened an hour ago, and this is what you could have done. I'm talking through, this is what I'm looking for, this is what I'm waiting for to happen next, this is what I need to see happen next, this is what I'm doing right now. That's how I typically roll in my own trading room. The smallest time frame I go down to, this is my trading setup. So the smallest time frame I go down to is the 89 tick chart. This is the combination I use: 480-minute chart and an 89 tick chart. If you don't have that tick chart data, it's about the equivalent of a 2 or a 3 minute chart. So what do we do at JP? What do we do on the pound? To be fair, today, the day is done. The day is done. The day was done before we started business. One of the other things, again, something else I've talked over in detail in the past is average range of movement. You'll see some percentage figures on the left and right hand side of the charts. See some percentage figures here. These are a visual reference to an average day's movement on the right, and on the left an average week's movement. So what I'm looking for in using an average true range to assess is there sufficient potential based on average? Is there sufficient potential for a new trading opportunity? And if the answer is no, then there's no trade. So this morning it was, any past 65% of an average day's move, and the majority of the day is done. On the euro yen, we've got 122% of an average day's move. 100% of an average day's move was done before I even got out of bed this morning. So on euro yen, there's not enough potential expectation of movements to consider a new trade. So what should we do today? I'd have a long weekend. Go and do something else. There's just not enough opportunity. There's not enough expectation of movements for me to profit from. Pip Finder, yeah, it should be. It's a standard tool. All it is an average true range indicator with a 100 period setting. It shows the daily and the weekly average range of movements, and I use that to gauge expectation. So, for example, if price this morning was around that location, so exclude what's happened, but say price in real time was there, then I could see that from the low to where the current price was. Price is between the 35 and 65% level. It's around 50%. So there's around 50% of an average day's move left as expectation. That's my expectancy, my profit expectancy, 50% of an average day's move for an intraday opportunity. So is there enough potential for further movements? Is another assessment to look for. Again, I've talked about that several times in the past. How do we set the ATR, average true range? You can, if you've got a tool, if you've got an indicator, you can put it on your chart. A quick sheet for you, put a fib retracement tool on there. Put a fib retracement tool on there. Can everyone see these settings? All I'm doing is customizing a fib retracement tool. Okay, so what I want to see is the 0 line, the 100% line, the 35 and 65% levels. And what I'm going to do is I'm going to set the distance of an average day's move. Let's just call it 150 pips. Okay, so 120. So just for argument's sake, it's not quite, but just for simplicity. So I'm going to set the start and end points, the distance between the 0 line and the 100% line. I'm going to set that at an average day's move. So the distance between those two figures is an average day's move. Again, I want to see the 0 line, the 100% line, the 35 and 65% levels. And those two 35 and 65% levels, when I click OK, means it's going to give me 4 levels. So I can drag this grid. All this is a fib retracement tool. I can put that on the low of the day, and these solid red lines are the lows of the day. This is a 60-minute chart, and it projects upwards. There's the 35, 65, 100% of an average day's move. I've put that on the low of today. You can see that we've got 35, 65, 100% of an average day's move with the average day's move set at 150. In reality, it's a little bit less than that. Let's just get that exactly right. Okay, that's about right there. So we've got the 0 line, 100%, 0, the start, 35, 65, 100%. And what that does is it means that I can, again, drag this round wherever I want. So if I ended up looking for a short, I just put that on the high of the day, and it would project down the 35, 65, 100% of an average day's move levels. And visually you can see where price is in relation to an average day's move. And again, it's a good indication. I mean, it literally, it's served me well many times over the years. Typically, again, if you look for yourself, and let's just do a quick exercise. Typically, when an average day's move is done, price stops. Here we go. Average day's move done. What happened? Price stopped. Average day's move, or 65% of average day's move here done. Price stopped for around about 7 hours. Then it continued. Did exceed an average day's move. We take that from the high downwards. 65% of an average day's move. So anything past 65% of an average day's move, I'm considering the day to be done. We can zoom in a little bit more over the last few days. The euro yen and the yen cross are a little bit volatile at the moment, not unsurprisingly, but nevertheless, average days move done. What happens? Price typically stops. Yesterday, average days move done. What happened? Price stops. Today, average days move done and exceeded. What typically happens? Price stops. So it's a good indication. I mean, so what should you be doing on, is there any trading opportunities today? Personally, I don't think there is. The day's done. It was done before most of us got up out of bed this morning to do anything. So what have I done today? From a trading point of view, all I've done is close previous trades that were open from earlier in the week. But from a new trade perspective, the day's done. 93% of an average day's move on the euro dollar. We've got 100% of an average day's move on the pound yen, 120 on euro yen. We've done around 80% of an average day's move on the pound dollar. It's just not enough potential to commit to a new trade today. And at the end of the day, folks, if you've not got anything out of this move, out of the moves this week, don't chase it. Don't chase it. I mean, there was several hundred pips on offer, several hundred. And if you've already got that, don't worry about chasing scraps on a Friday afternoon. Okay, last couple of questions, folks, then I think I'm going to have to call the session to a conclusion. So, briefly though, what we've done is we've looked at reviewing simple price action, finding a location of significance to deploy whatever your strategy is. We've also briefly looked at the average day's move, or the way I use an average day's move, and I use that to filter out my trading opportunities and use it to assess, is there enough potential for me to look for a trade today? Anything before the 65% of an average day's move location is game on, and anything beyond 65% of an average day's move, just let it go, forget it. There's just not enough potential. It's not worth chasing. So last couple of questions then. So when does my day start? Typically between 6 and 8 o'clock in the UK morning, and I run through between 4 and 6 in the afternoon. So it's a good long day. My main screens. These are my main trading screens here. So the question is, setting up and zooming on different pairs or use multiple screens. I've got multiple screens for my live trading, but this is the one that what you see now is what's projected in my own trading room. From what time do you measure a move? So going back to the ATR points, it's not a time, it's the low of the day and the high of the day. So wherever the low of the day is and you're looking for longs, you project your ATR up. If you're looking for shorts, wherever the high of the day is, you project your ATR down. Alex, ATR period, I use 100 periods. The standard setting is 14, but I use 100. Some people use 50, is somewhere in between. Again, personally, I use 100. Right, folks, that's it. That's the conclusion. Simple price action and finding locations to take a trade-off, finding significant levels of interest where the balance of power has previously changed, to try and predict or anticipate more specifically a future significant change in the balance of power. We also briefly looked at average true range and how I use that to assess whether there is or is not a trading opportunity. So even though the location might be fantastic, if there is no potential expectation of movements, then I don't take the trade. Again, the pound dollar, a good example, the location is great, but today there is just not enough potential for me to commit to a new trade. Okay, folks, that's it. Thank you very much for your time. I believe this session's been recorded. I'm sure the FX Street team will let you know when that's uploaded for your viewing pleasure. But other than that, folks, have a great weekend, and I will see you all next time.